o'clock. We can give another minute or so for some people still to want to attend this session. But in the meantime, a very welcome to you at another session of a DRD information session. This is about project budgets. I did it earlier in the year, but for some of you that couldn't attend then, we'll do the same, and hopefully it will be very valuable to you, to all of you. Okay, so project budgets are as important as any part of your planning of a project. In the various stages, you will see that, so I will start on budget today, but just to see all the stages of planning of a research project, you will start with what you think you want to do a project about, and then you will go out and find some funding for your project. And if you do find some funding, you will do a proposal to a funder. But together with that proposal, normally goes the proper budget. So my speciality is more the reporting side, but obviously without proper budgeting and proper execution of that, there won't be proper reporting at the end of the day to the funder. So let's do a little bit detail on budgeting to make it more clear how you can plan your budget, and it all forms part of the proposal to your funder. So to have a good start, we developed a full cost budget template so that you can start your budget and be sure that you take into account everything that you need for your project, and not forget about most important and normally the little things. So full cost in this sense means that you need to budget everything, including the ICRR, which is the indirect cost recovery levy of the university, which is at the moment 20%. Always make sure that you include that. Sorry, the one thing I'm going to stop myself now. One thing I want to say is please have all your mics off and your cameras off. It's just better for echoing on some of the attendees' side, and I also want Whitney to keep an eye on the chat box if necessary. Sorry for the interruption. Okay, let's go further. Back to the full cost template. So the full cost template will give you already formalized in that you will have the basic remuneration levels for the specific year and for 3 or 5 years in the future. And we have a separate budget for clinical trials, which is a little bit different than the normal full cost budget. So it depends on what type of project you are doing. But the full cost budget also calculates the VAT, and apart from that, obviously ICRR, but it takes into account whether there's bursaries or not, which will not be levied VAT or any ICRR. Some of the bigger funders have their own funding or budgeting templates, but we recommend that you first complete your budget on the full cost template that we have, and then transfer it to the specific funder template if they require it that way. To have a good start on your budget is to make sure what your funder require. So most of them will have guidelines, financial guidelines, and in that guidelines, you will see that they can be quite prescriptive on what will be eligible for them to fund. and for you to expense on. So it's important to go through on their website, or normally the guidelines or terms and conditions will be attached to an agreement, but to go through that and make sure that you are aware of any restrictions that your funder might have on some expenses. There's funders that do not fund any bursaries, there's funders that do not fund salaries, or there's funders that will cap equipment to a specific amount. If you need to purchase equipment more than that amount, they will tell you to get some extra approval for that. So it's very, very important to make sure what is your funder's guidelines in terms of budgeting and overall financial guidelines for reporting also. Some basics to take into account when you budget, and this will maybe come further on in the project, is that as the project goes, you will find that you have budget for certain amounts on certain budget lines. But as the project goes, sometimes it happens that you will spend more on another budget line than what was originally budgeted for. So, like it happened in the COVID years, that we had budgeted for travel expenses a lot, and there was no traveling. So most of the funders said, okay, you can come back and we can do alignment or transfer between budget lines, adjustments. If not that much, they will allow 10% or 20% deviation from the normal budget line, which will be acceptable to them. But it is important that you keep track of your expenses against your budget line, so that when it comes to reporting, that you don't get a shock and say, okay, you've overspent so much, but you didn't have the approval, and then they won't allow the funding on that specific line item. So that is very important to keep track of that. When it's foreign funding, we obviously have to do with exchange rates. And as you know, our currency is very volatile against all the major currencies. So when you budget in your foreign currency, make sure that you make provision for currency losses. It's good to budget more conservative rather than not, and also use the BER, the Bureau for Economic Exchange, that economic research at the university. So they have a prediction of about 2 years on exchange rates. So you can also use that as a guideline when you have to budget for in the foreign currency, but for more than 1 year in the future. As I said on capital equipment, remember that if there's any cap restriction from the funder, make sure that you take that into account, and that you also get the necessary approval if you need to buy very expensive equipment. Inflation, that normally comes in with from year to year. We have a fixed inflation rate on the salaries already that is incorporated into our full cost budget, but also take that into account when you have to budget for certain travel expenses or other expenses from year to year, to take into account an inflation rate. Sorry, okay. When we budget for personnel cost, you can't budget less than the basic remuneration level. So although it is already incorporated on our full cost budget sheet, you are allowed to budget for more than the basic remuneration level, and obviously if approved by your funder, but you can't budget for less than the BRL. So there's a tab with the BRL levels for the different post levels that we have at the university. Is already there on the budget template, and you can use that. And on your quotation to your funder, you are allowed to increase that, but you can't budget for less on the full cost template. Currently, our indirect cost recovery rate is 20% on income. Remember, 20% on income is same as 25% on direct cost. That is already incorporated in the full cost budget template. The calculation will be automatic, but that is what the current rate in terms of policy is. When the funder does not allow any indirect cost or less than the percentage that we have, remember that your cost center will be standard at 20%, but when you do the agreement or the contract with the funder, make sure that you also apply then at the division here in finance for the waiver of the ICRR or the reduction of the ICRR. You need to get a formal approval if there's a difference from indirect cost rate that's allowed by your funder before you start your project. And the moment when you receive any funds into your cost center, the 20% will be automatically deducted, but you must apply then for the correction according to the approval that you have if the rate is different. So always remember to apply immediately for the correction of the ICRR when you receive the money if there was approval for another rate of indirect cost. I see a lot of times when I do financial reporting that specific correction is not asked for, and what happens is that it takes your available funds away, and you can't spend it. So the moment when you have the correction, those funds will be available again to spend. When we apply for foreign funding, and also in your budget, you will see if it's foreign funding, it won't attract any VAT. There's also no VAT on bursaries or donations or NRF income, but any local funding will be subject to VAT. So if you apply to a local funder, always take into account the VAT percentage, but the moment when it's foreign funding, the VAT can be ignored on the full cost template. And then you specifically have to take out that part of the calculation or the formula on the full cost template. One thing that I want to emphasize on, when you need services from a foreign supplier on your project, so you need to pay someone overseas for a service rendered on your project, you have to calculate 15% VAT on that service. So we call it an imported service, and any imported service will be subject to 15% VAT. So it's important to, if you have to budget for a foreign supplier, that you include 15% VAT on that specific part of the budget. It's quite not new in the legislation. We didn't apply that in the legislation so strictly in the past, and after a VAT audit, it was picked up, and yeah, the university had to pay a lot of VAT. So please take that into account, because that VAT that's applied to a service outside will be charged to your cost center. When you receive funding for bursaries, it doesn't matter whether it's foreign or local. If you use the account number 5387, which will only be applicable on local invoicing, it won't attract any VAT or any ICRR. So then you don't need to have any adjustments for that. So it's only on your foreign funding, which will go to one account number 5598. That will be handled differently, but always remember, if you have to locally invoice to a funder for bursaries, use that account number, then you don't need to have any VAT or ICRR corrections. So I always say when, not necessarily only when you do a budget, but overall in your project planning, it is important to take into account all the policies, especially the financial policies that will be applicable. So from the start, the main policies will be that you need to create a new cost center for every new project. So a cost center works like a bank account. You receive your funder's money into that bank account and you pay all the expenses on your project from that bank account. And the balance on the bank account is what you have left or still have to spend. And at the end of the day, if everything appears in that one cost center, it just makes your reporting very easy if you need to report to the funder. So it's very important, every new project, a new cost center. Yeah, so there's a lot of other financial policies applicable with payments, approvals. If you go above the threshold levels, you are totally aware of all the other financial policies that's applicable. Sometimes I get a question that why is it important to do a budget, even if the funder does not request one. It is compulsory now to do a budget for every project. So in the past, if a funder didn't request a budget, it wasn't necessary to do that. But for the last 2 or 3 years, it is compulsory for us to have a budget for every contract that is entered into, because there's a lot of risks involved and that affects the university's credibility. Because if you under budget, you can imagine you can't complete your project if there's under budgeting, or where would you get any funds to complete the project? And it goes hand in hand with any financial management that must be done well, and also the cash flow risks and exchange rate risks all comes in your planning stage of your budget, that you must take that into account. When you do a budget, some of the funders will ask you to justify the cost so that they can see that it's realistic, that it's just a figure that you've put in there. Sometimes you need to get quotations like for flights or sometimes expensive equipment, so that you can prove that it will cost that much to be part of the project. It's very good to, while your project is running, to keep your budget and your actual expenses in line, and to see that you stay within your budget lines. It's just good financial management, and that you also can see that you will successfully complete this project if you just keep in touch with the financials and within all your budget predictions that you have for this project. So I've touched on currency and forex expenses. It is important also, and you will find that normally in the agreement or in the financial guidelines or the terms and conditions, if the funder requires any reporting, and the reporting must be in the foreign currency, make sure that you precisely know in what currency it must be. Obviously dollars, but what rate? Will it be the rate that you have received the funds? Will it be the rate at the end of the reporting date? Will it be an average rate over the time span of the project? It all makes a difference in the outcome of your reporting, and whether it shows that there's funds left or not, and will the funds be repayable or not. It all has an effect on what exchange rate is used when you do reporting. So make sure that you know what the agreement say, or the financial guidelines say, and if not, ask your funder what will be the rate of the reporting, that you can be sure that when you budget, it will be at the correct one. Oh, sorry. I went too quick now. We had some cases where the planning of the budget and the start of the project were quite a few months from apart, but that happens when there's a lot of uncertainties and things to sort out before the time. So there's some difficult project that will happen. And when you have that, it is good to have an adjusted budget closer to the start of the project. Because if you budget in the beginning, when you start with the proposal and dealing with the funder, but the project starts a year or more later, there can already be cost increases, salary increases, exchange rate differences. So it's important to maybe just redo the budget or a budget adjustment and see if the funder is still in line with that. Otherwise, it can, at the end of the day, be very costly to the project. With foreign funding, we have the facility of CFC accounts. The university has 3 CFC accounts in the dollar and the pound and euro CFC. So you can choose to accept the funding in one of the CFC accounts, and it stays there in the currency that it was paid. The benefit for that is that if you need to pay it out to partners that is also in foreign funding or for foreign service providers, that is just administratively easier to pay them then. There will be no benefit regarding exchange rate, because the exchange rate differences will still be charged to the cost center on a 6-monthly basis when the CFC accounts are reconned by finance people. The cash flow and tranche payments that I want to say here, and it's also applicable on the managed cash flow part. So you get funding that where the funder said, okay, I'll fund you for the project, but it's a spend and claim. So that means that you need to spend before you can claim any of the funding. And that means that you have to have some money in your cost center to spend. So some researchers will have a little bit of extra funds which they can put in the new cost center to fund the start of the project, so that there's a lot of expenses that they can claim after a certain period. But 2 other possibilities that you can do is to create a loan from another cost center, whether it's one of your own or whether it's from the department or the faculty. You can loan from another cost center where there's enough surplus funds, or you can apply for a facility. When a contract is entered into and signed, and you know for sure that you're going to receive the money, you can apply for the facility that will need some approvals to get there, but to provide some funds so that you can start the project. So that is 2 possibilities that you can use. Yeah, so summarized, a budget will be the responsibility of the PI, and together in the department and with the support of Division of Research Development, the contract office, the project accountants, I think any project can be successful if there's a proper budget. And at the end of the day, we will assist with any reporting, which will also form part of your budget, because you have to budget for that part of the project accountants to assist you in the financial reporting. A formal financial report to the funder must be signed off by Renette Eis, who is the Director of Financial Services, and she prefers any reporting to go through DRD's project accountants before it reaches her, because it's just time saving for her. To give you an idea how the full cost template looks like, more or less like this. And there's a link on DRD's website for the full cost budget. So this is just a part of the budget. And the rest that gives you detail, you can put in lines. If you do, just make sure that all the formulas pulls through. And then there will also be a tab with the remuneration levels of the different post levels at the university. Yes, I think that is the basic of project budgets that I want to discuss. I hope we can do some more on reporting in future, because from budget, it leads to the execution of the project, it leads to financial reporting, which is very important, and also the closure of your project. Thank you, colleagues.